Hi guys, Brown Asset Management here, and today I'm doing a stock review of Royal Dutch Shell, ticker symbol RDS, using my 6 simple steps. Please stick around to the end of the video if I think Royal Dutch Shell is still a buy in 2021. Just a quick summary about Royal Dutch Shell. It's a company based in the Netherlands that explores for crude oil and natural gas around the world. Its segments include integrated gas, upstream, downstream and corporate. The integrated gas segment is engaged in the liquefaction and transportation of gases and the conversion of natural gas to liquids to provide fuels and other products. The upstream segment includes the operations of upstream, which is engaged in the exploration for and extraction of crude oil, natural gas and natural gas liquids, and the marketing and transportation of oil and gas. And the downstream segment is engaged in oil products and chemical manufacturing and marketing activities. If we look at the stock price over the last year, at the start of the year it was $51 a share. During the pandemic hit a 52-week low of $19 a share, rebounded strongly but then tapered off once the dividend was cut, once again hitting lows at just under $21, but has been very strong since then and is now leveled off at around $38 a share. There are two types of shares, the Class A and the Class B, but today I'm going to be going through the Class B share. As for UK investors, it helps with maximising your dividend return, and also for any American investors, you can purchase this on the New York Stock Exchange and it maximises your dividend returns also. So in short, buy the B shares, not the A. The market cap of Royal Dutch Shell is $160 billion, making it one of the largest of the super majors, and pre-pandemic was one of the largest companies by revenue. So looking at my 6 simple steps, the first would be PE ratio less than 20, and Royal Dutch Shell does not currently have a PE ratio as it is losing money, so that is a fail. Step 2 is the revenue increasing over the last 5 years, and the revenue has gone from 233 billion to 180 billion, so that's a fail there as the revenue has decreased. But if you look at the revenue over the last 5 years, it was increasing at a good rate until the pandemic. So that is positive. In a normal year, I think this would have increased. Step 3 is the profit increasing over the last 5 years, and the profit has gone from 4.78 billion to minus 21 billion. So that, once again, that is a fail. But if we look at the profit over the prior years, it was increasing steadily and was even up to 24 billion. So under a normal year, once again, I think this would have positive profit. Step 4 are the shares outstanding decreasing, and the shares have gone from 8.51 billion to 7.81 billion. So there's a check mark there. Good news for Royal Dutch Shell as they're buying back their shares. Looking at step 5 are the current assets greater than the current liabilities, and the current assets are 90.69 billion and the current liabilities are just under 74 billion. That is a check mark there as they can pay off all of their current liabilities with their current assets. Now on the final step is the free cash flow increasing over the last 5 years. To get the free cash flow, we take cash from operating activities minus capital expenditures, and that gives us the free cash flow. So the free cash flow 5 years ago was minus 1.6 billion, and that has increased to 17.51 billion. So that is a check mark there. Great news. The free cash flow has increased over the last 5 years. If we look at the free cash flow of the last 5 years, it was minus 1.6 billion, just under 15 billion, 30 billion, 19 billion and now 17.5 billion. That gives us an average free cash flow of just over 16 billion. And if we get a price to average free cash flow, which is the market cap of 160 billion divided by 16 billion, that gives us a ratio at 10.02, which is very, very good. And if we get a price to the most recent cash flow, that is 9. So they are both excellent numbers. To put things in perspective, of all my reviews, that is actually the second best of price to free cash flow ratio. Now, one thing I know that everyone is interested in is Royal Dutch Shell's dividend. This has been slashed in April, which was the first time it's been cut since the Second World War, which was a massive shock to investors, and the share price did reflect accordingly. It did drop, but the dividend yield is still a healthy 3.39%. The annual dividend is 65 cents a share, and the next dividend is 33 cents a share. And the ex-dividend date is the 18th of February 2021. So if you buy Royal Dutch Shell tomorrow, you will be eligible for their dividends in March. So if you like the stock, I would go buy it now. Now to have a quickly look at some of the analyst ratings. The Refinitiv rating has it at a buy with 5 buying and 1 holding, with the average target price of $51 a share, on the high at 59 and on the low at 42. So very bullish there. Tip ranks have it as a moderate buy with 2 of the analysts buying, both at $57 a share, so very bullish again. So to quickly summarize these 6 simple steps, PE ratio less than 20 was a fail as it doesn't have a PE. The revenue has not increased as it went from 233 billion to 180 billion. That's a fail. Profit has also decreased from 4.78 billion to minus 21 billion. The shares outstanding has been decreasing from 8.15 billion to 7.81 billion, so that's a check. The current assets can pay off the current liabilities with 90 billion to 74 billion, and the free cash flow has increased from minus 1.6 billion to 17.51 billion. So that is 3 passes and 3 fails for Royal Dutch Shell. And if I have a look at my calculations on the share price, which is using discounted free cash flow, I have a calculated stock price at $60 a share, which means it's a 57% discount currently, so the model says it's a buy. And if I increase the numbers to a more bullish amount, removing the issues from the pandemic year, that would even put the stock price up to $100 a share, which is at 166% discount, which is massive. So in short, do I think Royal Dutch Shell is a buy? And the answer, if you haven't guessed already, is a definite yes. I think it can easily reach up to its previous share price of $52 a share. I don't think this company is going anywhere. I think it's going to beat the pandemic issues. In the long run, I would agree that green energy is going to be the future and companies like this will take a hit. But as a short-term play over the next couple of years, it is a definite buy. I was lucky to buy it at the end of October when it was at around $21 a share. So I've been very happy with my gains then, and I'm going to continue to holding it till it hits $52 a share. I think it could hit there and go beyond it. Once again, if you are interested in the shares, I would recommend buying the Class B shares. If you're a UK investor, the B shares are listed on the London Stock Exchange and are not subject to the Netherlands withholding tax. And once again, if you're American, buy it on the New York Stock Exchange and buy the Class B. That will maximize your returns. So to now quickly look at some of the technicals, the 50-day moving average is blue and the 200-day moving average is in grey. Here in December was a bullish move where the 50-day moving average crossed the 200-day moving average, so that was a bullish signal and would indicate that you should have bought there. This is known as the golden cross. And a general bullish signal is when the prices are above the 50-day moving average, so you can see that the prices started crossing here, so once again that was a bullish signal, and again when the prices crossed the 200-day moving average. The 50-day moving average has acted at support where it has followed the stock price over the last year and hasn't broke too far below it. And as you can see here, once the 50-day has crossed there, they've actually started to diverge again, which is a strong signal for Royal Dutch Shell. Right guys, I want to thank you all for watching. Please give a like if you enjoyed the video. Leave your comments if you are going to be buying Royal Dutch Shell. I hope you do, as I do think it's at a discount, and worst case scenario is you'll get a nice dividend in March. Please consider subscribing if you enjoy investing and stock review videos, and I'll catch you guys next time.